Let's look at an example of accrued expenses. In this particular example, the accounting period end is the 31st of March. In April, the photocopier maintenance invoice for February, March and April is received, dated the 26th of April. The total invoice maintenance charge is £1,050, and on closer inspection of the invoice, £650 relates to February and March within the accounting period end. The total invoice of £1,050 is paid by BACS on the 31st of May. First of all, we're required to post the journal entry adjustment required at the accounting period end for the accrued expense. We look at the total for February and March of £650, and remembering that expenses are always debits within the expense account, into £650 for the accounting period end to follow the accruals concept and the matching principle. And the reference is an accrued expense or accruals, and that is the debit entry or the charge for the February and March expense of the photocopier maintenance. The other side of the entry, remember, accruals are as good as liabilities to your organisation or your business because it will be paid at a later date, and that reflects that liability. So £650 dated the 31st of March, and because we have machine maintenance photocopier charges to accrue. And that completes the double entry, debiting the machine maintenance expense account and crediting the accruals account. It then asks us to balance the machine maintenance expense account and the accruals account as at the 31st of March. Our expense account will be charged to the profit and loss account, add up the larger side, take it across to the other side, subtract what is above, and that will give you your charge to the profit and loss account. Closing that expense account, crediting the expense account, and debiting the profit and loss account. And the accruals account, we add up the larger side, take that across, and that will give us a balance carried down reflecting the accrual carried forward on the 31st of March. Let's finish off by completing the double entry. The balance brought down on the 1st of April is that accrual of £650 relating, representing that liability. In April, it asks us to make entry adjustment required to reverse the accrual account. So let's have a look at this. We need to get rid or nullify the accrual on the 1st of April, debiting the accruals accounts because of machine maintenance, and then crediting the expense account, machine maintenance expense account. So now we've nullified the accruals account, setting us a clean sheet for the new period, and we've credited the machine maintenance expense account. Post the photocopier maintenance invoice to the machine maintenance expense account. Let's look at our invoice dated the 26th of April, and the total invoice was for £1,050, and the other side of the entry would be the payables control account. Now let's take a step back here and see what's happening. We have an invoice charge into the machine maintenance expense account in April of £1,050. But if we look, we know that £650 of that related to the previous period. So you wouldn't want to charge in April for the £650. So by reversing that accrual, we've actually got the correct charge of £400 for April in that machine maintenance expense account. And that completes the accruals expense example.